So what is up? I have a few debts from you. Debts. I owe you a few videos, like the journal yesterday. And now we're journaling for October 21 and 22. Let's start with this shit. This shit was a Fomo trade. It happened maybe while I was eating lunch. Maybe I think while I was eating lunch or just as I got home. I entered off of a 1 minute order block of a 1 hour low. But if you see what 1 hour low will be talking about, that 1 hour low is so fucking close to where I fucking entered. Oh, this shit. So this was the low, and this is where the price was happening. This is the low, and this fucking nitwit entered on that position. There was a 1 minute low right here, and typically what I do with order blocks, I streamline it and look for the 1 minute lows. Here's the 1 minute low of that order block. Here's the 1 minute low of that order block. I thought I got an reaction once I saw this bullish candle, and you know what? It just plummeted to my stop loss. And that's what the trade is about. That's minus 50. I mean, we're managing our risk management pretty good, so we're losing 50 and we're gaining more. So now this is 50 loss or 1% loss, and this guy is also 1% loss. I think this is another same confluence. I mean, you don't win everything, even with the confluence that you used to apply that works. So what did I do? Where am I looking at now? We're in gold. Oh, I should be in XAU USD. Yeah. So let's delete that for now. And I think that's the same confluence, just a few minutes apart. So this guy, I don't know what I entered from here. This is, man, that fucking trade isn't even worth a journal. I don't even know my confluence was. This is a trade I took, right? Let me just double check. This is 4341.90. I mean 4255.63. Is this 4255.63? Actually, this entry was 4329.973. 4329. I'm not sure. This might just be a front test. Okay, this is a front test. Let's copy this guy. Put it somewhere here. Okay, this is a front test. And the other trade that I did was a swing trade. So what I did in the swing trade, I said just fuck it and enter the 0.01 lots. Set my stop loss to 1% to the downside and went for long. It did go in my favor. I think I did that trade. That's a long, right? Yeah, that's a long. I think I did a trade somewhere here. And I just closed on October 21. Which gained me about 1.3% of my capital. And that's not something to journal. But when we would enter on potential swing trades next time, we would look for biases. Or if our bias is short or long, and look for dips before we enter so that we have a deeper enter. That's something. Okay, for the next trade, we're now on October 21, which is yesterday. Yes, yesterday. October 21 minus 1%. I think this is a trade. Let's double check. Entry on 4216. 4216. No, it's not here. 4329. So other than that, this is another front test that I did. It didn't hit my entry, but my confluence was correct. I think my confluence was something from a fair value gap. Yeah, it's from this fair value gap. I just my entry was just so high. I did actually commit this on my. I think I did commit this on my funded account, but it didn't went through because my entry was too high. It didn't touch my entry. It just wicked this specific the entrance of this fair value gap, and it went short from that. But our bias is correct. Okay. Okay, this is 4216. This is not the trade that we took. I think this is another front test. This is 4190. Where's 4392? 21. Are we in 2021? 2021. Oh, I think this is another swing trade. I think it's another swing trade. 4329, 4277. Yeah, maybe that's another swing trade. 4329. Yeah, I think it's another swing trade that I took. I think so. It happened around. I entered on 9:15. 9:15 from here plus 8. Actually, let's just look for the pattern. The pattern. There's a downwards. I think this is the pattern. October 21. Okay, we're not looking at October 21. October 21. Oh, this is already the trade. And the other trade. Where was that chart? Okay. That was on this guy. Here's the trade. Here's the trade that we took. Our entry was 4094. No, this isn't the trade that I took. October 21. October 21 minus 52. But it's a minus 1%. I really forgot the confluence. I'm just gonna note it down on my journal because I didn't plot it down here on my trading view. Okay, we're now in October 22. So October 22 is today. Excuse me. So the trade that I took was this. I took this around in the morning. I woke up at 5:30, slept for 7, saw a trade potential, and took a trade on the retracement. So what I entered on, I saw this break of structure, 5-minute break of structure. I think there was also a 15-minute break of structure down there. Yeah, this is a considerable 15-minute break of structure. What happened? There's this resistance down up here. I think not just a resistance, but a fair value gap. Yep, this fair value gap. As you can see, this fair value gap caused a lot of reaction as price entered this fair value gap and went bearish. And we have a buy order right here. Thankfully, it didn't hit my stop loss, or a few pips from my stop loss. So as it entered my stop loss, our entry here was a fair value gap, a confluence. This is a 4-hour low, 5-minute touch or 5-minute order block touch on 4-hour low, 5-minute break of structure, 15-minute break of structure in IFVG. That was the confluence. So this trade is a bullish long. This trade that entered on my buy order. It went down a bit. That it rallied. It's being resisted on this fair value gap. As you can see, there is this bullish flag pattern. I didn't trust the bullish flag pattern, so somewhere around here I did close partials, half of the trade. I did close partials and it went upwards more. But what happened was I set a stop loss here, around here, on this marking right here, which I'm gonna draw. On this marking, I put a stop loss, and my stop loss got wick on this movement. So that was a trade. I mean, we did gain around 1.3%, so that's good. So here's the another trade. This was a fucking nice trade that we took. So we took this on London session. This is London session 3 p.m. and I just marked out 30 minutes after London session. What happened, or what I saw, was this guy is a 3-minute fair value gap. So you can see this guy is a 30-minute fair value gap, and on that fair value gap, price has reaction. Specifically on this 5-minute fair value gap. On this 5-minute fair value gap of the 30-minute fair value gap, we had a liquidity sweep. This liquidity sweep was from this liquidity. This liquidity, as you can see, went higher, swept that liquidity, also touched this fair value gap. This is a bearish fair value gap, so it caused downwards reaction. We saw this. There's also a IFVG here, a 15-minute IFVG. Here's the fair value gap that got passed by this downwards movement. So that's another added confluence. Here is also a 15-minute fair value gap. This candle right here, this candle is a 15-minute fair value gap. So that's a pretty good confluence. There was a bit of resistance here from this 5-minute bullish fair value gap and another 5-minute bullish fair value gap. I mean, this, I'm not sure if we can consider this an inversion fair value gap, but this is surely inversion fair value gap in the 15-minute. So as that happened, there's also a 5-minute break of structure. Not really a 15-minute, but a 5-minute break of structure. I had the buy orders. Actually, initially, price was already happening here, so it tapped the stop loss. But I did put another buy order, a buy order on this fair value gap, a sell order, and it touched the tip of my sell order and consolidated. Maybe it's consolidating from this fair value gap, 15-minute fair value gap, and from this fair value gap down here, which acts as resistance. As you can see, it consolidated. But since we came down from a downwards movement, from a liquidity sweep, and from a 5-minute of a 1-hour fair value gap, of a 30-minute fair value gap, the bias was short. Since the bias is short after this breakout right here, and I think that's also a 15-minute break of structure right here, this one that I marked, that's a 15-minute break of structure, price rallied to the downside. So I did set a few take profits here. Initially, my take profit was just here, which is an order block, I think. Actually, a fair value gap. There was a fair value gap here. No, it's a order block. It's an order block right here. So this order block was initially my take profit, but then when I saw this 15-minute break of structure and the high momentum to the downwards movement, I put it right here, which is above a low, a 1-hour low, or a high time frame low, and also below the 15-minute fair value gap. Excuse me. So looking at this, price actually went more to the downside. It went here, maybe to this low, but there's not really a low here. Maybe it just tapped this order block and rallied higher, and it went back again after touching this bearish fair value gap here. So that was a trade. That was clean 1:5 bar R, almost 1:5 bar R, and that was a nice trade. That is actually the second trade that I took, so I did break my rule, but I think I'm gonna stick with maximum of 2 trades, either loss, win, whatever. Maximum 2 trades per day. 3 might be too much, because 3 might allow me to enter to low confluence trades, okay. So here's another potential trade that I could have looked into, but I was taking a bath. I just came back from the gym. So my confluence was from this is this is a 4-hour low. It's the 4-hour low, and there's a 1-minute order block on that 4-hour low right here. As you can see, as price touched the order block, it caused some reaction. I saw this break of structure right here. I think that's also a 15-minute. Oh, there's no 15-minute. So 5-minute break of structure right here. low equal lows, then a higher low, higher high. So that was the consequence of that bias, and also it's a high time frame touch, high time frame confluence. So what happened, or what I did, was on this newly created order block right here, which is this guy. I put a buy order. I didn't put a buy order actually. I just front tested this because I was about to take a shower. So it did rally to the upside because this guy is a 30-minute high, and this high has this 5-minute order block. As you can see, as price touched this 5-minute order block of the recent low, I think this is a 1 hour low, rallied upwards, and actually just stopped cleanly on what I expected it to stop, which is this 5-minute order block. So that was another potential 4.85 RR, almost 1:5 RR, that we didn't take. And also this, I also had this bias because this is a high time frame low. Yep. With that confirmation, another touch, could have entered from that, going short, maybe shorter, might be go here. So those were the trades. The first trades that I took last Tuesday were bad confluence, actually Fomo trades, and just swing trades that I didn't account into. I mean, one of those had some profits, but two of the trades yesterday, one of that is Fomo, low confluence, 1 minute. That's a bad thing. And the other one was a swing trade, fuck it swing trade. So it didn't went in my favor. And today was a good day. So we'll show. Should we show? Sure. I don't fucking care. So here's the statistics of my account right now. Hopefully we continue on this and we be consistent. But we're learning. We're learning from past mistakes. We're learning from experience, and now we're almost half of phase 1. Let's go. And let's look at the stats. So yesterday we're down. We just took one trade on one day. We took 3 trades on yesterday, and now we took 2 trades, 2 winning trades, and we're up 332 on this funded account. Let's go. So I think that's a video to summarize it all. Yesterday were bad trades. 1 minute confluence. The other was a fucked swing trade that went in my favor. The other was a fucked swing trade that didn't went on my favor. And for today's trade was high confluence. I think the first one could be better. My entry there. Okay, let's look back into it. My entry there was from a fair value gap. Valid entry, valid stop loss, actually clean stop loss. So the stop loss allowed us to have enough breathing room. I think moving the stop loss to profits and having partials was okay. Okay, that guy just died. Was okay because we secured the win. But if we didn't move our stop loss, we would maybe potentially hit our take profits. Oh, another lesson from that trade was a bullish flag has bullish momentum. So trust a bullish flag. For this trade, this was a clean trade. This was high confluence trades, and high confluence take profits, high confluence stop loss. After the consolidation right here, we got expansion, whatever that is called. I need to learn market structure, market cycle. And this trade, we could have took this trade. So I think maybe next time, if we see a high confluence position that we can look into, we should take it, considering how right we are. As you can see, it just stopped, just entered on this and rallied higher. Imagine if it's like this. Oh my gosh, man, that's gonna be 41.36. You get the point. I mean, it's not always like this. You see, this is already an example of what could happen. So, so yeah, so that's a trade. That's a journal. Maybe I'm gonna post the fucking video from this. I did create a video of me fucking around while doing this thing. I'm not sure. So I think that's journal for day 20, October 21, and October 22. We're up. Hopefully this goes on, and we pass phase 1, pass phase 2, then get the shit that we want. So let's go. Good night.